Well, we've seen Digicore realize a phenomenal growth in the past and off what had been a very high basis. Well, today's number showing a decrease of 59% in full year HEPS, this breaking your track record somewhat. Run us through some of the pressure points that stand for the business at the moment.
I think just starting off calendar year 2009, obviously with the recession hitting all over the world, that obviously caught up with us as well, and as you rightfully said, probably the worst year that we've experienced in the last 8 years. We've had a situation where commercial vehicle sales throughout the world dropped to certain stages up to 50%. That obviously had an effect on us, and I think at the same time transport operators were sitting in an uncertain situation of what could happen, and from their side obviously stopped their spending as well. The European market just sort of, that whole bottom just fell out. No decisions were made. It was really a difficult time for us in Europe. And again, as I said, the credit crunch, credit was not available for people to buy our products at the time as well.
Well, if we look at your business, I mean, there's two key components. We've got the vehicle tracking services component on the one side, and then we've got fleet management unit as well. I mean, that has been your high-yielding component, but now we're seeing a severe decline being experienced there. Run through some of the shift that we're seeing in that dynamic at the moment.
I think we've seen, if we look at the fleet management side as such, as I said, Europe is really, their contribution last year was something in the region of 16.5 million rand to our bottom line for the comparative period rather, and that turned into a roughly 3 million loss this year, so that was a huge swing. On the South African side, although we've sold slightly more units, we had to get to a point where we introduced a totally new pricing structure. We reduced the price, and guys had the opportunity now to virtually pay off some of the capital over the next 3 years. Probably more profitable if you do the sum over 3 years, but for now that is one of the reasons why our turnover dropped on that side as well. If we look at the stolen vehicle recovery side, I think we had a phenomenal 2 or 3 years now. That is really the shining star in our business at the moment. And particularly if I compared with our competitors currently in South Africa, but also abroad, the guys locally have been suffering. Yet on our side, again, albeit, coming from a low base, we've had tremendous growth. We're making inroads on that side. They're probably just over 50% of our South African turnover at the moment. And if you can recall, 3.5 odd years ago is actually when we only started with that division of our business. So we've really done extremely well and quite happy with the stolen vehicle recovery part of it.
So a slight shift that's happening there. I mean, you have taken that division a step further though, with the C-Track fitment centres being established. I mean, how exactly has that enhanced your operations here?
I think obviously it's a relatively big investment for us. We have found that the first centre on the East Rand is starting to pay dividends now. We're starting to make profits there. But again, that is an investment that normally takes probably about 8 to 12 months before you actually see things really starting to happen and to pick up in those fitment areas. But I think it's crucial to us. We've run over the years advertising campaigns, and the question always is, well, where does people go? And I think we had to create a scenario coming from the fleet management always sort of in the industrial areas now to come into the retail side where people actually know where to find the necessary equipment from us.
Having said that, I mean, you're making these new investments and taking your business, even broader, but this in a context where you've seen a decline in group operational expenditure. I mean, how have you exactly managed that while still exploring these new investment growth areas?
They were really, one of the scenarios, obviously we reduced some of our staff members in the factory in Durban, although it was mainly temporary staff members that we got rid of there. That was one of the areas, and I think just a general, looking twice at a scenario where we had to make expenditure. Obviously on the capital expenditure side there we couldn't really cut, and we didn't want to cut, but we were just cautious in our day-to-day operations.
Let's take a look at, with the success that you've had on your C-Track side of things. I mean, you've been exploring value-added services to leverage off, if we can say, the crime situation that South Africa presents. Run us through what's on the agenda as far as the personal tracking system is concerned.
I think personal tracking, we've launched it in conjunction with, and you might have seen the campaign with Cell C and Nashua recently. The intention is to pick up that whole process again towards June with the World Cup now, to allow us to give some form of protection and security to visitors to South Africa. But I think that's going to be a lot more than that as well. We will use that as an information tool. They can communicate with friends of theirs on the same tour. We will probably give scores through various matches being played elsewhere, etc. Should you get lost, we'll be able to tell you where you are and obviously direct you to your hotel, etc., etc.
So some opportunity coming in there on home ground. I mean, earlier on you mentioned some of the pressure that your operations in Europe is under at the moment, but there's also a mention of a C-Track Solar CX95 onboard unit. Oh, that's a mouthful, which was developed for a German vehicle manufacturer as well. So when are you expecting that to gain attraction, and what do you see that spelling in terms of momentum for your European operations?
I think again that will give us opportunity. It's been a pretty long road for us as well to get or in the process of now getting OEM approval. As we've indicated, the technical, the electronic side, that has been approved, so we're busy with the last bit of environmental test that needs to be done still. The moment we get the final and full approval, that obviously will give us an opportunity to work a lot closer with an OEM, which has really been part of one of our goals for the last 2 or 3 years, and that obviously will enhance sales.
That in Europe, your operations in Pakistan, how's that faring?
Pakistan went through a very bad time towards the beginning of last year. We have seen an increase in sales. I think their total number of units moved from our production line from 9 to 11%. So we've seen an increase, I think, if I can remember correctly, about 36% on the previous comparative period.
But important to emphasize that when you look at Europe and you look at Pakistan, it's two different markets that you're catering to, where Pakistan is more concentrated on the stolen vehicle side of things. You've got Europe that's focused more on the fleet management services sector, right?
That is 100% correct, yes.
Okay.
In Pakistan, obviously, we had the political as well as the economic situation there that was relatively detrimental. But again, I'm relatively positive that we've seen the numbers from Pakistan's side starting to move up again.
So through all of this, we've got the company cautiously optimistic about the full year period of profitability in the second half of the financial year. What's your outlook for full year earnings?
Do you want a figure?
No, not exactly.
No, I think as we've indicated, we are positive. We've seen during the months of January and February already where we've probably received orders to the tune of what we did in the previous 6 months. So just if we can take that as a starting point, then we should have an extremely good 6 months lying ahead of us.